You did not buy your farm and not capitalize it. If you paid cash for it, you capitalized it. If you put a down payment on, you capitalized it. If you borrowed money for cattle, you put a little money in, you capitalize those. You capitalize everything else, and you see that that's okay. But when we get to the policy, then we start questioning, well, where's that money going? I don't have access to all of it. You bought life insurance. You need to capitalize, and you have to understand you're doing that with everything. Hello, and welcome back to the podcast. Thank you very much for being here. Okay, I've got John back, and that means we're reviewing BYOB again. So we took a little hiatus, John.
Yeah, I thought you weren't going to ask me back, but here we are.
Well, yeah, here we are. I was like, oh, John's schedule has been super busy, meeting with people. My schedule's been busy. I've been gone. And so I'm like, oh, I looked at John's calendar today and I'm like, he's got a little bit of time. So I'm going to see if he can squeeze one in for us. So we are going to talk about the next chapter in Nelson's book. So if your book is dusty, brush it off. We're back in there. Your BYOB book. If you're new, go back a few podcasts, and we started at the beginning of becoming your own banker. And we're reviewing the financial Bible, as I call it, because it's really what John and I go by.
Yes, it is.
Okay, so we're in the chapter of creating a bank like the ones you already know. In the beginning of this chapter, Nelson talks about there are a number of steps, and what he's doing in a whole is comparing starting a bank, an actual brick and mortar bank, to starting a life insurance policy. And how do those two things compare? And so I got to be honest, like I always am, when I read this the first time, I thought, well, that is I don't care about this story, Nelson. That's stupid. Why does that even apply? But now that I break it down, and you guys listening should do the same thing, I read this book paragraph by paragraph and try to really think about what is he trying to say? Because it had just been easier if Nelson just said what he wanted to say. But that's not how he
he's a storyteller.
So, he is a storyteller. So the first thing he talks about is you must study the business of banking. He's talking about brick and mortar. You must study the business so that you have a firm grip on what it's all about and feel you can run such a business. Without this confidence, you're fighting a lost cause. It's a jungle out there. So if you were to go say, if I said, John, hey, you should go start a bank. You should build a bank. And you thought that was a good idea, you'd probably do a little research.
Oh, absolutely. And you know what just came to my mind even is like back in the day when we got certified as practitioners, a lot of the learning that we had to do was just about banks and how they work. So Nelson even had us learn a lot of that when we got licensed. So it's definitely
when we got our authorization, we had to study Austrian economics. We had to know all of that stuff because he thought that was important to know when we do this. But when you and your dad found infinite banking, you read the book and then you dug into it and you did more studying.
Oh, yeah. Yeah, you got to research it. And this is the first chapter where he's really trying to get you to put that banker hat on, right? And how do I think like a banker? What does that even mean? He's going to lay it out here in this chapter.
Right. So there are people that come to us that we have meetings with, and they're like, oh, I read your book once super fast, and this is great, and this is a great idea. And how do I get started? That's fantastic. But the people that come to us that do their due diligence and they study the business, they understand.
Yeah. Yeah, you can definitely tell fairly quickly when you get in a meeting who knows what they're talking about just from either doing a lot of banking or they've read this book and your book and they did all the research to figure out how they should even approach this concept.
Yeah, if you're going to get into the business of banking, then you need to study.
Yep.
Okay, so the moral of the story is do your due diligence. Because if you opened any other business, you would do your due diligence. You're not going to go buy cows without doing your due diligence. Be like, well, I came from the city. I'm going to go to the sale barn and I'm just going to buy some cows. Nobody does that.
Nope.
You might want to know how you got to feed them.
Yeah, that is true. His next point in here, or step 2, I guess, would be next you must get some capital, aka money. And it had better be in the order of 20 million or more. Well, of course, you don't need 20 million to start a policy, but I just met with some people today that I'd met with them a few months ago, and then we had another meeting today because they were like, where am I supposed to find the money to do this? They don't want to start a huge policy, but in their case, the wife was stepping away from her job so she could be at home more. And where are we going to get the money? And is it even worth doing a policy if it's this small? It's like, hey, you got to start somewhere. There's a capitalization period here. And that's kind of what Nelson's talking about with this step.
Right. You have to, number one, that's why John and I are here, is to help you figure out where your money's going so we can help you figure out how to capitalize it. But you have to capitalize it. You're going to have to put some money in to be able to borrow money back out. You don't start a brick and mortar company. You don't start your farm without capital. So you can take the brick and mortar piece out of this of a bank and apply it all to farming. You did not buy your farm and not capitalize it. If you paid cash for it, you capitalized it. If you put a down payment on, you capitalized it. If you borrowed money for cattle, you put a little money in, you capitalize those. You capitalize everything else and you see that that's okay. But when we get to the policy, then we start questioning, whoa, where's that money going? I don't have access to all of it. You bought life insurance.
Yeah.
So you need to capitalize and you have to understand you're doing that with everything.
That is exactly right.
Okay, number 3. Then, if you're going to start a brick and mortar bank, you're going to go to the banking commissioner's office and apply for a bank charter. Bear in mind, the commissioner doesn't hand these charters out indiscriminately. It's going to be hard. It is going to be hard to get that licensing to be a banker. So, on the insurance side, is it hard? Do we have to qualify? Yeah. You have to go through a health exam.
Yep.
It's not as hard as getting a bank charter, but you have to go through a health exam. They don't just willy-nilly give life insurance policies out.
Yeah, I would say he says in here, the chance of getting one is less than 100 to 1. It's a little easier than that to get a life insurance policy, and they're not going to turn that many people away. But there's some effort you got to put in to prove that you should be in our group, be in the part of the company.
Yeah, and he says, I underline this too. There's a lot going on in the unseen. At this point, you need to use your imagination. The bottom line is that you're going to spend a lot of time and money in this phase of creating a bank. You are likely to have passed before you will finally win the coveted charter. We don't have to go through that huge pain in the butt because the insurance company already has it figured out. All we have to do is qualify. So it's not going to be as hard, but you're going to have to qualify. So that was number 3.
You got to check off.
Yep. What do you got for 4?
Well, in the meantime, you will probably have gone through the part about picking a good location and a suitable building. So what he means by this is you got to find the right place to house this bank. And in our case, that's dividend paying whole life insurance, right?
And what company?
One America.
Right. Yeah. What company is the good company for you and fit? What agent is the perfect agent for you and what fit? And so if that's our agency, great, fantastic. You can work with John or I. If we decide kind of who the company is, we're happy to tell you why we love the companies we use, which the majority of them is One America. That's who we're using for many reasons. But you have to pick the location. What is that location? And again, you're not just picking that location willy-nilly. You're doing your due diligence on it. So if you want to leave it up to us to do the due diligence, that's okay too, because I've done the due diligence. I just sat with the chief investment officer 2 weeks ago at dinner, and I had a lot of questions because I'm always wondering what's going on with the financials of the company. And so I'm doing that due diligence for you. But if you want to, you can do it as well, because you wouldn't just go buy a lot, put a building up, and then you're like, oh, that's in the ghetto. That's probably not a good place for my bank.
Yeah, you want the one on the highway on the corner, with nice access and all that.
Yeah. Yeah. And then number 5 is now you're finally in the business as a bank. You must make your bank known by lots of advertising and inducing people to make deposits into the bank. So you don't just start your bank and then you lock your doors and be like, oh, we're not going to invite any more people in. And I was just talking about this with my colleagues in Canada. They have a client that they started a bank and then they locked the doors and said, no more deposits are allowed. When we sell you a policy, you at that moment, you have your banker hat on. You're like, yep, I want a policy. I want to be a banker. And then you get your policy, you sign for your policy, and most of you shut the front doors and you're like, it's just a lot of work running that place. So I'm just not going to pay attention to it. And you never make any more deposits. Can you imagine if a bank is like, yep, I'm going to build 10 branches and let's just hope and pray somebody comes in and makes a deposit and pays attention to us?
Business wouldn't go very good.
Right. The banks wouldn't make money because they need deposits in order to lend more money. The more money you deposit in your policy, the more money the insurance company pays you in compound interest and dividends.
And I also think part of this too is like, hey, your cash value is there for a reason. Go use it. Put your deposits in, but then go use it too.
If you're not using it, it's because you're not putting enough money in, which means you have enough cash on the other side that you don't need to go there.
Yep, exactly.
The last paragraph of this column, or the last sentence, he says, do you notice thus far that you have been paying out money for years in getting this business established? So if you look at Nelson's illustrations in his book, he's saying you capitalize for 4 years and then you can borrow against it. We're not doing that. We're capitalizing and borrowing 10 days later. But he is already telling you to beat Parkinson's law. Notice they've been capitalizing this for years and they've not once complained about it because they know they're going to get it in the end. They know that this is going to be a benefit. But in our head, we're already complaining. We're capitalizing our 401ks and IRAs. We're not complaining about that. We just keep putting money there. And that money is completely lost and not accessible. But here, we want to complain about losing access to 25, 30% of money?
I had wrote down, banking isn't an overnight success. There are costs to starting a bank, whether that's a real bank or infinite banking. There's some startup costs to either one.
Yep. Okay, so then Nelson gets a little off track. So I'm going to go to the last page of this chapter, and then we're going to come back and keep him in track. He got a little squirrely in the middle of this chapter, I think. On the very last column of this chapter, he says, you must admit that getting into the business this way is very costly and time-consuming. It will be a long time before you show a profit, probably as much as 10 years. And I also find that interesting because when does this policy typically break even?
Year 7 to 10.
Yep. So if you're in the business of banking, you're probably not going to make money for 10 years. If you're in a brick and mortar business, I mean, I've interviewed hundreds and hundreds of business owners. They didn't make money for the first 5 years. It took them 5 years. I just talked to somebody today that they're just starting their little farm ranch operation, and they're starting from scratch. They bought a place, they've got all their own stuff. It will always take those people about 5 years to break even. They're probably not really going to see any profit till year 7 through 10. Nelson knew that. He was already comparing it in the book.
Yeah, this is no different than any business. Same boat.
Yep. Then he says, there's a much easier way to accomplish the creation of your own banking system, And the mechanism has been around for over 200 years. It's tried and true. It's called participating dividend paying whole life insurance. But the problem is that very few people know about the business and how it works, including home office folks. And so we think, oh, this is some new grandiose thing. It's 200 years old. It's not new. It is super old. It's just truly that people don't know about it. But they've already got the startup. They've already got the actuaries in place. They already went through the capitalization phase. They already have the money in the bank so that they can turn around and lend it out. They already did all that stuff.
Yeah, 190 years ago.
100, yeah. The company we use 147 years ago. The company we use is 147 years old. They did that 147 years ago. Now we get to come in and reap the rewards because they hired all the staff. They have all the programs. They've picked their location. They've done everything for us. All we got to do is go through the health exam and find a good agent.
Easy.
Easy peasy. Easy peasy. Yeah. And then he goes on to talk about cogeneration and electrical power and all that good stuff. And he said, in this system of selling power, sell them the power. It is much more efficient than trying to do it any other way. So we could try to do infinite banking another way. But how? I just did a podcast not so long ago about some clients that were talked to from somebody local that, oh, we're starting this life insurance company in this state and you could buy a policy. And guess what? If they died, the death benefit never got paid out for 7 years. So they would give them a payment. They'd give them like a little bit and then they'd get the rest of it over 7 years. Why? Because it's a brand new life insurance company. They have to capitalize their system. Why would I help another company capitalize their system when I don't know their history of paying dividends? I don't know the CEO. They even talked about the fact that, oh yeah, we'll sell it to a bigger company once it gets established.
It doesn't
how about I just go with tried and true? Because he said all the ingredients are already there in place. All you have to do is understand what is going on in such an insurance plan and tap into the system. That's it. You're tapping into the system. Okay, let's go back to where he was interrupting us. And he talks about loans. The banker cannot make a loan unless there is a deposit. And then he talks about the fact that the banks do fractional reserve banking and they lend 10-1. But it's always interesting to me when people say, well, I can put this in and borrow against the death benefit, right? No. I think you've missed the point.
Yep.
You can only borrow against the cash value piece. So if you want to borrow, you have to fund it. If you want to take money out of a savings account, you first have to put the money into the savings account.
It's 1-1 instead of 1-10. Banking.
Right. Yes. And so in the policy, because Nelson starts talking about fractional reserve banking in here, he is saying, hey, you don't have to, in the bank, they're doing fractional reserve banking. So you put $1 in, they can lend you 10. The life insurance company can't do that. They can't inflate money. So the big piece of the Austrian part of this that we had to learn was that if people did this, yes, you still need a bank. You still need to deposit your money into a bank. But ideally, Nelson is saying, don't use the bank for your large purchases, which we went over in a previous chapter. You should be using your life insurance policy because they cannot inflate the dollar 10-1.
Well, he says here, do you want a prudent relationship between capital and assets? And so you can't let that balance get out of whack, or you're just like a real bank.
Yep. Because he goes on to say, the relationship between capital and assets, which is to say, the loans on the books and between the loans and the deposits. Then he continues on to tell us a story about the First Bank of Midland, Texas, and how they were lending money and they got caught. They had more loans out than they had assets. And what they found out is that the bank shareholders were lending money to themselves and not paying it back. So this is kind of I want to touch on something before I forget. There's a fair amount of conversations I have, and maybe you have too, with people that say, I paid that tractor off, but they wouldn't release it from collateral. They wouldn't give me the title. Well, if that's the case, there's only two options. One, the guy is lying, or two, the bank has more money lent out than they have assets and collateral for. So they have overlent and the feds are coming in and auditing their books. So now you might, as a good farmer, they might say, well, I'm going to take more collateral for your land. I want 50% collateral. But the farmer down the road that isn't so good, they're allowing him to take a loan with very little collateral. Well, yeah, because you're at the same bank. The good farmer, his collateral is covering the bad farmer on the books.
Yep, on paper.
As a whole. And this is exactly what Nelson was talking about with the Midland Bank. And then the shareholders were the problem. They were lending money to themselves and not paying it back. And Nelson says they were making loans to themselves, neglecting to pay them back. They had to repay loans plus interest. Their bank would have still been in operation, but greed prevailed and did them in. It did them in and every other holder or depositor in the bank.
Yeah,
Think about what
talks
happened
about higher up on the page how overnight basically their deposits decreased by 500 million. That's fractional reserve banking. There is the goal is to not have everybody want their money at once. And that's what happened to this bank.
And guess what? Everybody lost faith in that bank. So their deposits decreased because everybody lost faith in the bank. A bank is only as good, and the US dollar is only as good as what we believe it to be. Crypto is only as good as what people believe it to be. When people lose faith in crypto, what happens? It goes down. This is why I don't like crypto. I think it's stupid. And I've tried to understand it. You are sending me emails and trying to get me to understand it. And then I come back with another reason and you can't come back to me with an explanation as to why I should like crypto. So until then, keep sending the emails. But crypto, if everybody believes in crypto today because they don't believe in the US dollar, we're going to go crypto. But I want to know, people are ignorant to finance. 97% of the population does not even know how to manage their money. That's why Dave Ramsey is so famous. Because they need help managing a dollar. Do you really think they can't even manage a dollar, that they're going to lose faith in the dollar and understand fractional reserve banking? No, not anytime soon. Not going to happen. And so later on that page, John, you already said this about the grocery stores. It's like the grocery store. You don't take food out the back door. You pay for it out the front door. But he says in here, the banking system I'm going to tell you about, you can destroy by not obeying the basic rules of banking. Loans have to be paid back, or you can kill the best business in the world. It is up to you, but do not try to blame others when it happens. And I see this, like, mic drop right there. And we're done here. We see this, and I see it kind of across the board, not necessarily in IBC, but just like as you see people post on social media, I tried that and it didn't work or whatever, but you didn't know what you were doing. You weren't running the business correctly. I had a client that paid his full premium, took a full loan every year, never paid the loan, never paid the interest. He had no cash value to borrow at some point. It all went to interest. It's not my fault. You didn't call me. Yeah. You didn't read the book. You ran your bank like you ran your bank like the Midland of Texas.
It was a ticking time bomb. I mean, that only works for so long.
Yep. And you can't blame somebody else because you built your bank, you lock the doors, you open them once a year to take a loan, and you never paid attention to the bank again. If you're going to start a bank and you're going to start a life insurance policy, you need to be the banker. And we preach this over and over and over, but it is important again and again and again, because it's not about starting a policy and then saying, you know what, I never have to pay attention to it. I'm going to call John and be like, what do you mean I bought life insurance? What are you talking about? Because it happens. And we try to be really good about catching people that should not have policies. But occasionally they'll get by us and we're like, oh yeah, they get it. They understand, but they don't. When you say you're going to have a policy, think about literally you are building the bank. And if that bank fails, it's nobody's fault but your own.
Yeah, you're the shareholder in this case. So if it goes under.
You're the shareholder, you're the owner, you're the depositor, you're the lender, you're the everybody.
Yeah.
The insurance company they're doing their job and their job is great. I had a client meeting this week and the guy said, well, I just want to do a review of my stuff. How's it going? I said, it's going just like it's supposed to. And he's like, is there anything I need to do? I'm like, nope, you just keep paying premium. I wish, people sometimes think, well, I need to meet with them like I need a financial advisor. What's my rate of return? How are the markets? This is just steady. It's doing exactly what it's supposed to.
Yeah.
So we're happy to talk to you. I love it because I love to catch up on the personal side and what's happening. But there's nothing to talk about in the policy because it's exactly what it's supposed to do. It's the most boring, unsexy thing on the planet.
That is a good way to describe it.
And I like boring, so I am good with that. All right. Anything to add, John, before we close this up?
No, I think this is it's not a long chapter, but it's got a lot of good content in it. And it's really, like I said, kind of the first chapter where he's really trying to get you to put on your banker hat and put yourself in that mindset.
I agree. Okay. With that, you guys know the routine. Go to farmingwithoutthebank.com, grab your book, schedule your appointment with John or myself. I'm going to say this. If you schedule with John, you do not need to talk to me. So if you want to talk to me, you wait and talk to me, but don't think you're going to meet with John and then meet with me to talk about the exact same stuff. We have a ton of people waiting to get in and have meetings. So please be considerate of those people because they also don't want to wait 3 months, but they are. So anyway, schedule your appointment with one of us and then we'll figure out where you can get started, if you can get started, if it's a fit, and go from there. Otherwise, let us know how we can help. All right, you guys have a fantastic rest of your day.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.